Well-vetted VA community, it's Hammer coming to you again this week, January 18th, 2023, with your mortgage market update here in the vetted VA community. I am still on the road, so I don't have any guests today, but would love to hear from you. If you're here live, go ahead and say good morning. Would love to know that you're here. Go ahead and give us a hashtag live. Be a part of the conversation. Ask some questions if you have any. Share any thoughts that you might have. If you are watching on the replay, go ahead and give us a hashtag replay. Let us know that you were here. We do monitor the post, so go ahead and ask your questions or share your thoughts as well. So again, if you do have any questions or comments, go ahead and let's hear them. Otherwise, we're going to just jump in and talk rates. Today, we're going to keep it short because I'm looking to get you all I can real quick. So remember, this is not an offer to lend. When we talk rates, we're talking averages and generalities. You should always shop your rates. So where are we at over the last couple of days? Well, let's do a quick rate recap. Rates were slightly improved. In fact, you may see some articles that talk about how we've seen some of the best rates that we've seen, definitely this year, but in the last few months, actually. And it's a far cry from the mid-sevens we were at just a couple of months ago. Right now, we're seeing VA rates in the high fives to the low sixes. Again, it depends on your unique situation, which is why you should shop around and talk to a vetted VA professional. Conventional rates, if you're not getting a VA loan for any reason, or if you know somebody that's getting a conventional loan, as we call them, they're in the low to mid sixes right now. And the reason we've seen rates kind of improve is inflation is cooling. We got a report last week that showed inflation was getting better. That was, again, third month in a row of what we call disinflation, not deflation, where prices have actually come down, but disinflation, where the rate of inflation has been reduced. So we see recession fears growing. Those concerns are what are driving mortgage rates to improve a little bit right now. We've talked about this a few times, that basically mortgage rates are reacting right now to what's going on in the bond market. Fear of recession with the economy slowing down, that's helped mortgage rates to improve a little bit. In fact, today we got what we call retail sales data about consumer spending. Consumer spending drives our economy. So with that, we did see some of the lowest numbers we've seen in about a year. And that actually did help mortgage rates to rebound a little bit today from yesterday getting a little bit worse. Again, they're gonna move a little bit, kind of day to day, but we're not seeing any big moves. In fact, if we go ahead and take a look at our rate forecast and pop that up on the screen, basically the expectation for where rates are going to go now, rates are likely to remain very much near the current levels. It's not likely that we see much improvement ahead of the Fed meeting in a couple of weeks. That Fed meeting starts January 30th. It ends February 1st. That's when we get the Fed's rate announcement, their policy statement. And it's not likely we're going to see too much rate improvement ahead of that meeting. Again, VA rates in the high fives, low sixes right now, not likely that we're going to see them get tremendously better before then, maybe not even any better. It could be kind of holding steady, but it's also not likely that we're at risk to see them rising much from here. Now, we could see them creep a little bit. Generally, what happens when we don't have anything that we can definitively put our finger on is going to give a direction to the market, we could see a little bit of movement day to day. Sometimes you'll see them creep up a little bit, but overall, we're in a really good spot. If you're out there house hunting, you can feel comfortable that the payments that you're looking at are very likely to be available to you when you find a home right now. That's what's kind of where we're at. Now, we're not likely to see rates that are going to drop tremendously in 2023. If we see rates stay in the fives for those VA rates, that's going to be a good year. And that's kind of our new normal. That's where I want you to get your head wrapped around. We're not going to see rates in the twos and threes again, y'all, not unless we get a very, very bad problem with the economy. If we were to see a huge recession with lots of layoffs and unemployment spike and very, very, very bad things happen. So the only reason we saw those rates was because of the pandemic, the lockdowns, and everything that kind of came with it. A more normal market, we could see rates in the fours maybe in 2024, but for 2023, we're very likely to see rates settle in the fives, kind of stay there. So a little bit lower than where we're at now, but not tremendously lower. And then probably rates will improve a little bit more towards the end of the year than when we begin the year. So that's kind of where we're at. Remember, you've always got available to you that Earl Rapid Refinance loan. I say always available, but there, of course, are restrictions to it. You need to have 210 days under your belt. You've got to have 7 payments, I think 6 payments made I should probably double check. That's why we have our vetted VA professionals, and they give to you. But anyway, if you do have a higher interest rate, don't panic. You'll be able to get that down at some point. You'll at least have the opportunity to do so. So anyway, I don't see a lot of comments, but I do see a few of you on this morning. So if you do have any questions, go ahead and let me know. I will be glad to answer them. Otherwise, that's it for today. We're going to keep it really brief, but keep it dialed in for you. Let you know what was going on. If you have any questions, let me know. Go ahead, put them in the post. Remember, you can join us each and every week as we do these. We certainly do love having you here. Let me go ahead and pop this up there for you. Where is my happy little join me next week button? There it is. Join us next week. We'll go ahead and discuss this 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, 9 a.m. Pacific. I will have one of my wonderful vetted VA professionals as a guest next week, I'm sure, and we'll go back to that format. We'll go a little bit deeper, but just wanted to give you guys a quick recap, even though I'm coming from the road this week, and there you go. So take care, everybody. Have a fantastic week. I will see you next week. Again, put any questions. We'll be glad to answer them. Take care, everybody. Bye-bye.